Hello and welcome to Business 360. I'm Ashmit Kumar, and here are the headlines that we're tracking this evening. Sensex and Nifty hit yet record highs once again, even as profit booking wipes out some gains in late trade. Mid-caps underperform. Heavy police presence on the streets of Beijing and Shanghai as China attempts to quell the protests against COVID restrictions, announces new measures to vaccinate the elderly as pressure to reopen the economy continues to grow. The collapse of crypto exchange FTX continues to send ripples across the industry. Crypto lenders block F1, which was valued at $5 billion recently, files for bankruptcy. Another smaller crypto exchange called Bitfront announces plans to shut down. Outgoing Revenue Secretary Tarun Bajaj is confident that government will meet the 6.4% fiscal deficit target this year. Says capital gains tax regime needs to be simplified, but he's disappointed with the response from what he calls conflicting views and interests. Telecom companies dial the government asking over-the-top players and apps to pay a user charge, argue that entities creating the infrastructure are entitled to claim charges from those using it for commercial gains. Elon Musk feuds with Apple, accuses the tech giant of trying to censor the platform by pausing advertising, also claims that Apple threatened to pull Twitter from its App Store. Trouble mounts for the Jalan-Calroc consortium that won the bid to revive Jet Airways. Lenders tell NCLT the consortium has failed to meet any conditions required for takeover, also termed JKC's request seeking ownership transfer as misleading. Separately, the Jet Airways Cabin Crew Association moves NCLT seeking liquidation of the airline's assets. Well, the Cellular Operators Association of India, or the COAI, which is the representative body of the telecom players in the country, has urged the Telecom Department, the DOT, to impose usage charge on OTT players or over-the-top players and applications. That essentially means OTT players covers everything from Zomato, from Netflix to Uber to WhatsApp, everything. Now, the COAI has argued that telecom companies are entitled to such payments by OTT platforms as they provide infrastructure that these apps rely on. Now, the cellular body has also proposed that OTT players and telecom companies need to negotiate these usage charges, and a regulatory framework is necessary to govern the dues paid by these OTT players to the telecom companies. So, what's the rationale behind these demands? Well, the COAI has said that increase in the revenue of OTT platforms will result in telecom companies spending more and, in fact, giving more to the government in the form of license fees. Well, India's telecom industry has seen data usage rise more than five-fold in the last 5 years, but the increase in revenue is only up 40%. So what explains this? Reema Tendulkar is joining us now with more. Reema.
Thanks so much for that. So data usage by you, me, and everyone has seen an unprecedented increase. It's increasing exponentially. Just take a look at these numbers. So the monthly data usage has gone up 5.5 times in the last 5 years. So one would assume that telecom companies which provide this data would charge for it and therefore would be making money from it, and therefore the telecom revenues would also be going up. The answer is yes and no. Yes, because the telecom industry revenues are going up, but it's not going up linearly. In the last 5 years, the telecom industry revenue has roughly gone up by 40%. This is data that we've picked up from CLSA as well as TREI. So in a nutshell, in the last 5 years, data volumes are up 550%, but telecom industry revenues are only up 40%. The reason is that operators offer you bundled packs, and many of the popular packs provide 1 to 1.5 GB of data per day, and most of us don't consume all that. So it basically means, so assume if I was consuming 300 MB of data every day, right, my usage went up 3x. I would be using 900 MB, but it still comes within my daily allowance. Even if I increase it 5x, it would still come within my daily allowance of 1.5 GB per data. So which basically means that even though my usage has gone up, the telecom companies have not made that incremental revenue with every subsequent increase in the usage. So that explains why industry revenues are up 40%, even as the data volumes have gone up 5.5 times in the last 5 years. For the industry revenues to increase from here on, operators need to take price hikes. You know, the ARPU before the disruption, and this is Bharti Airtel's data that we've picked up, was actually closer to 200 rupees. The trough it hit was close to 100 rupees. It basically means the ARPU's halved, and now it's slowly limping back to pre-Jio days. But this, despite a 40% hike in prices that we've seen in the last 3 years, India's ARPU is still amongst the lowest in the world. Back to you.
Right, Reema, thanks a lot for that. Now, to take this discussion forward, I'm now joined by Nikhil Pava, founder of Media Nama, and Prateek Vagre, policy director at Internet Freedom Foundation. Gentlemen, thank you so much for joining us. Mr. Pava, let me come to you first. As far as this demand is coming from the COAI, the rationale, at least on the face of it, seems plausible that, look, I built the infrastructure. The OTT platforms are riding on this infrastructure. Why be shy from paying for it?
Thanks, Ashmit. Look, this is not a new argument. We heard this exact same argument, and I remember the date. I was there, August 8, 2014, at a TRAI seminar. And the TRAI has settled that matter in the sense that, this would amount to something called differential pricing, where the telecom operators would be charging different kinds of users differently. So, for example, a business user would be charged substantially more, whereas someone like me as a consumer would not be charged as much. Someone who's watching your show might not be charged as much. Now, let's not forget that the way the internet works is that every user pays their immediate mobile operator, their immediate internet service provider. So, for example, if I'm accessing the internet through Airtel, I'm paying Airtel. If you're running a startup and you have a server with, let's say, Hathaway, you would be paying Hathaway for bandwidth. So basically, you always pay the mobile operator or the telecom operator or the ISP that you directly engage with, and then between them, the ISPs have peering arrangements with which they pay each other. So effectively, if you were to say that anyone who started a website should pay a telecom operator for someone to also receive that data, that would amount to double charging.
Sure.
They called it free riding in 2014. They're calling it free riding now. But at the end of it, it's double charging. It doesn't work from an economic perspective, because what will happen is that some people, it will just increase the cost of starting up also. So if you're celebrating Digital India, you're celebrating Startup India, it's also because for the business as well, the cost is relatively small. And if I have to go and do a arrangement with every single mobile operator so that their users can use my service and that I would have to pay them a revenue share, then it will just make it difficult for me to operate. So what you'll end up with is a separate ecosystem with Airtel, a separate ecosystem with Jio, and that interconnection that gives us the internet will no longer exist. So this honestly is a settled argument. It's an old argument. They're just trying to bring that same issue again and again and again. They've done it at TRA events I've attended over the last 4 years as well. Look, I don't see why we should be giving any importance to what they're saying. If they keep saying something over 6 years, it keeps getting ignored. Why should you give it any credence? Why is this discussion even happening today? I don't get it.
Sure. So essentially what you're saying is that it's old wine in a new bottle. But Prateek, if I may come to you and again raise the same issue.
Old bottle.
Like Mr. Pava's point, old bottle. So this is essentially an issue that was argued at length at the time of the net neutrality debate. But that was some time back. The reason I point that out is because the COAI in its letter makes references to more recent conversations that we've seen in the EU, where the countries likes of France, of Italy, Spain, are in fact actively talking about fair formula, wherein there's a pricing formula that puts the part of the burden also on these OTT players, which are responsible for the bulk of the data consumption. Is that an argument that is beginning to get perhaps credibility in Europe, in EU, and perhaps percolate down here to India?
Yeah, so if I can just continue on that old wine analogy, right? I think it's basically old wine is just now we've got a bottle imported from Europe, but it's the same old wine, right? And look, so as you pointed out, right? So in late last year, we had a number of senior officials from telecom companies in Europe making this similar argument, and then trying to say that look, OTT players are consuming a lot of traffic, etc., and they should have this. They should be paying their fair share, right? That's the term that's being used. Now it is so this it is the as Nikhil said, right, we're having the same argument again and again. Even there in Europe, there is opposition, right? Civil society organizations are opposing this. It is being pointed out that this creates a risk for net neutrality, because you're potentially creating a separate class of customer for the ISP, who they may be incentivized to offer differential level services to. It also then, the other thing that's being introduced now is this larger issue with large technology companies and their dominance. And that's a general concern, I think it's misplaced to try and fit this into that same bucket, because and what you're essentially doing by relying on these so-called large technology companies for revenue, you're further cementing the dependence and the dominance that you're so worried about, right? So it's also a flawed argument on that front, right? And thirdly, there's this question of, okay, if you're seeking regulatory intervention, the first question that you ask is, hey, where's the market failure, right? And in this case, look, as end users care about the two ends of the internet, right? If I could put it in those terms, they care about the quality they are receiving as ISP subscribers, and they care about the services they are consuming. They are not necessarily interested in how the ISP peering, etc., works, and how ISPs manage their costs, etc., over there, right? So it's a unit economics thing, and it's being parceled off as OTTs need to pay their fair share of thing, but there's no argument for that, but there's no basis for
Let me
that.
ask you then. So let me then ask you another supplementary question. We reached out to the BIF, the Broadband India Forum. They couldn't join us, but they shared a few comments over a phone call, and they essentially said that if this argument were to cut ice, that OTT players should be paying their fair share, then the argument that we are getting now from the BIF is that, look, we're also responsible. OTT players are also responsible for a 70% jump, 70% consumption, data consumption. So essentially, will the telecom companies be willing to share 70% of their data revenue is a question that the BIF is asking. Mr. Pava.
So one thing, the OTT companies, and this OTT is a telecom phrase, they're all internet companies, right? Internet companies also pay their immediate ISP. So all ISP revenues are also dependent on what they're already being paid by a service provider. It's just that in some cases, a service provider might actually be in Europe instead of being in India. But just let's look at it in a very simple manner. If I start an app, I will, under this regime that they're suggesting, have to go to an Airtel, a Jio, a Vodafone Idea, a BSNL, an MTNL, individually create arrangements with them to pay them so that you as a consumer can access my app. So, and then if let's say I choose which ISP I'm willing to pay, because I'm just a startup, I don't have much money. So I will, let's say, go with a Jio and an Airtel because they're the largest, which means a BSNL customer will need to buy an Airtel SIM to be able to use my app. This breaks the internet apart. The internet doesn't function like that. This argument will not fly in Europe either. It's been tried before. Let's not, the other part that I had noticed from, the reel that ran before.
If I may just interject for a very brief moment. If I may just interject for a very brief moment, Mr. Pava, the argument that the COAI, the telcos appear to be making is that, look, we don't want to get the money from the small and the big guy, from the small guys. Let them operate free of charge on our networks. We want to target the big users, the heavyweights, and we want to charge them this fair price as a part of operating on this system, on this infrastructure.
Airtel was giving
Mr. Pava, you're on mute, I think.
No, I'm not on mute. Asmit, can you hear me now?
Yeah, now we get your audio, yes.
So I'd like to remind you of a point in time where Airtel was giving free access to Facebook, free access to WhatsApp. Why were they doing it? It is because these services get used by people like us that we buy mobile operator connections. The business happens because these services are on the internet. Now that these services are popular and that people are using them, they want to do this double charging mechanism. Look, it doesn't work. I also don't want any zero rating, but I also don't want them to be charging individual entities, double charging individual entities like this. And from a revenue perspective, let's not forget, back in 2014, telecom operators were profiteering. What were the rates? We were paying 256 rupees per GB, and that's why the internet in India was not growing. It is only because Jio came in, brought the prices down, that the internet has grown, consumption has grown, mobile operators have also grown. So even their business has shifted from being phone calling to largely being internet dependent, and they've done that without much pain. It is because of the consumption, because of user uptake that this has happened. There is a digital revolution in this country that has happened. Why do they want to spoil it by going and doing these shenanigans? I don't get it. And I would say that the government of India, if it ends up supporting the mobile operators in this, and we've had this horrible telecom bill, which somehow also seems to support, this kind of thinking, this will really hamper digital India. It will hamper our access to the internet. So let's not. I mean, I would say it's best if the TRAI and if the DOT ignores these complaints, and these it's already been settled by the DOT also, by the way, when they issued their own response to a consultation that they held again back in 2014. These are principled matters which have been settled. Let's not reopen them. It's pointless.
Right, Mr. Pava. So interesting debate this that we're seeing. We've heard the COAI. We'll, of course, continue to reach out to some of these OTT players as well to get their sense. But for now, the last word is yet to be said. But on that note, I'd like to thank both of our panelists for joining us and for sharing their perspective. But with that, it's time now to slip into a very short break. But coming up on the other side, heavy police presence on the streets of Beijing and Shanghai continues as China attempts to quell the protests against COVID restrictions. More details when we come back. Welcome back. Bulls were in charge on the Lal Street today. Sensex and Nifty hit record highs, but profit booking wiped out its intraday gains. However, both those indices posted a record close. Nifty and Sensex ended 0.25% in the green, with the Nifty ending above this 18,600 mark. The FMCG pack led from the front. That index saw gains of over 2%. Meanwhile, mid-caps underperformed the benchmarks to end close to 0.5% in the red. And in the crypto markets, the collapse of crypto exchange FTX has continued to send ripples across the industry. Crypto lender BlockFi, which was valued at $5 billion recently, filed for bankruptcy, and another smaller crypto exchange called Bitfront has announced its plans to shut down. The company said that they were shutting down in order to continue growing the Link blockchain ecosystem and the Link token economy. Well, on that issue, Manisha Gupta is here. She's joining us with the latest. Manisha, take us through the impact that the FTX fallout has had and continues to have going forward.
Oh, well, absolutely. I don't think this is the end of it. This is perhaps the beginning is what the industry really feels. And as you mentioned, we have seen a couple of exchanges go down yet again. You know, what really seems to be happening is that many of these centralized exchanges now do not want to only talk about trade. They want to start looking at the core technology, evaluation, Web3, metaverse. That is what they want to focus on. But the other exchanges which have had their exposure to FTX will continue to see some more pain coming in. That's exactly what we have seen happen for Bitfox as well. The amount owed to the creditors, this is for FTX, is $3.1 billion. And apart from FTX, there are 130 companies which also have filed for bankruptcy. These are affiliates, these are sister concerns of FTX itself. So it's not just one company, there are so many companies there. And all of these companies have had exposures to so many other hedge funds, pension funds, and investors. And all of that is getting impacted right now. So BlockFi is the latest in the list there, which has suspended withdrawals. That happened in the previous week, by the way. And it now has filed for bankruptcy. It was last valued at $5 billion. And we do understand that after the bankruptcy had been filed, it did have a major tie-up with FTX as well. If you look at the company's balance sheet right now, the cash on hand is $257 million, but we also understand that there are nearly 1 lakh creditors who are standing waiting for their monies to be paid out. But remember, all of that withdrawal was stopped in the previous week itself. These are some of the companies that actually have seen suspension of trades, bankruptcy being filed in this year itself. So it clearly has been a crypto winter in true sense and continues to be like that. FTX and BlockFi, of course, is the latest one. But in this year, we have seen bigger bigger names like Voyager, Celsius, Walt, and some of those other names also go down in the markets there. This is the fallout impact that we have had in a larger scheme of things as well. So when you look at the crypto investments outflow, that has been the highest in 12 weeks at around $23 million there. In other news, you also are looking at redemptions in this year that have been to the tune of $200 million, which has been much on the higher side, near record highs basically. Bitcoin fund shorts have been created as well. So most people believe that you could be looking at Bitcoin prices falling from here as well. Those positions stand at 9.2 million. If you look at AUM holdings, that also are at a two-year lows of around $22.2 billion currently. So the overall structure, the trade, the kind of money that is put in and shorts being created, all of that continues to be on the stronger side. Bitfront, as I said, is another company which has shut operations. They would not be doing any trading. They actually are completely moving out from that to growing into line blockchain and ecosystem and linked token economy. So this is what most of the street really seems to be working on right now. Not so much on tokenization, but use case tokens and, of course, the technology itself.
Right, Manisha, thanks a lot for that update. Now on to the big international story. China witnessed heavy security deployment in parts of Beijing as well as Shanghai, where protesters had gathered earlier. Now, reports of some demonstrators being questioned by the officials have also emerged. Meanwhile, the country reported its first decline in daily COVID-19 infections in more than 1 week. Infections in the country dropped to 38,421 from a record high of over 40,000 cases. The country's health officials further announced measures to accelerate vaccination in China for the elderly. Well, back home in news now coming from the aviation space, Singapore Airlines and Tata Sons have decided to merge Air India and Vistara, creating a new giant in the Indian aviation sector. So how big will this merged entity look? Madhiya Mujawar is here joining us to give us more perspective. Madhiya.
India's aviation space is currently dominated by budget airline Indigo. So what kind of competition are we talking about here? In terms of market share, Indigo will continue to be the dominant player, going by the current numbers. In October, the combined market share of 4 Tata-owned brands stood at nearly 26%. Indigo, meanwhile, enjoyed a 57.7% market share. So even together, the market share will be half of Indigo's. Let's look at the size of the fleet. Air India Express, Air Asia India and Vistara together have 200 aircraft. Indigo, meanwhile, has 245 aircraft in the air and is learned to have ordered 700 more, which should be delivered over the next few years. Now, Air India has also been placing aircraft orders, but even if these are inducted, the combined fleet size will remain smaller. Indigo has also been carrying more passengers on its aircraft. From January to September this year, Air India Express, Air Asia India and Vistara together carried 3.4 crore passengers, while Indigo carried 5.3 crore passengers. That's a difference of nearly 2 crores. Let's move to domestic passenger load factor. This metric tells us how much of an airline's passenger carrying capacity is being utilized. Indigo has a PLF of 82.1% individually. Air India, Air Asia India and Vistara enjoy a higher PLF than Indigo, which averages out to 84.1%. Lastly, I checked the on-time performance of these airlines in the domestic market. On this parameter, Tata Group's airlines have taken the top 3 spots. This is also the first time Air India has topped the on-time performance ranking in many years with an OTP of 90.8%. Indigo has slipped to number 4 with 87.5%, behind Vistara and Air Asia India's 89.1%. Experts tell me that given how close the operational parameters could be, Indigo will definitely be in for some stiff competition from synergies a combination of the 4 Tata brands could generate. And air passengers are definitely in for some interesting times.
Well, an interesting contest ahead in the aviation space. Madhiya, thanks a lot for that. But that's all the time that we have for. It's a wrap on this edition of Business 360. Thanks so much for watching. Stay tuned to CNBC-TV18. The news and updates continue on the other side.